In this video, traders, I'm going to have 5 signs that you're well out of sync with the market and how to fix it. Hey traders, warm welcome to you. So 5 signs that you're well out of sync with the market, and I've underlined well twice because I think it's important to distinguish between just being a bit of out of sync, right? You're a little bit late with your trades, whatever happens, you're not quite getting it right and aligning yourself back again and coming back in, or being well out of sync, because being well out of sync with the market, or massively out of sync, probably a better terminology to use, means that generally now you are vulnerable. You are vulnerable to falling into a state of panic, of fear, of kind of frustration, of significant loss, of a cycle of losing, all that kind of stuff. So let's not go into trying to tweak short-term trades and adjustments and the trading plan too much. This is when you're very out of tune and things aren't working. How you can spot it, and most importantly, how you can fix it. First one, number one. You can spot this by saying you aren't aligned with the bigger trend. This is a common thing, right? We've heard this probably hundreds of times on YouTube and on this channel. Align yourself with the bigger trend. But when you aren't, unless you have a specific strategy that is going against the trend and you understand that it's going to lose more often than not, you understand the pros and cons of it, 9 times out of 10, guys, the strategy needs to be aligned with the trend. It makes life so much easier. Even if you are Mr. Trend Reversal type of guy, Mr. or Mrs. Trend Reversal type of guy, even if you are that, you should be looking for short-term downtrend reversals to the upside within a bigger uptrend. You get it? So even if your strategy and your skill set and your strengths lie in finding the end of those trends, then wait until you get a counter trend move against the bigger trend and find the end of that one, as opposed to trying to find the end of the massive one. You know, the end of the massive trend is going to happen once. The end of those counter trend moves are going to happen multiple times, scores of times, if not more than that. In a bull market, you're going to get plenty of down moves that you can find the end of the trend on. So wait and use your skill set in those. Second one, your losers are frequent, unexpectedly so. So I put unexpectedly so in brackets because there are some strategies where you will take lots of losers and eventually look for the big winner, like the Black Swan hedge fund, or any kind of strategy you're looking for that real big win. Say buying a real far out of the money call or put options, right? You're going to lose most of the time. When you get the big win, it's going to make up for it, or it should make up for it. So your losers are frequent, unexpectedly so. If you're having a lot of losers and it's not part of the plan, yes, we're going to have clusters of losers regardless of any plan, however good it is. But if this starts to become much more, much fewer, much more than you expect, it's a sign you're out of tune with the market. It's a sign that you're not reading things correctly. It's a sign, most importantly, that your strategy is probably not suitable for the current conditions. This happens all the time, guys, and it will continue to happen to you. Conditions will change, strategies will work, then conditions will shift, and they are subtle. The signals are subtle. Market doesn't just one morning wake up, put its hand up and go uptrending today, mean reversion today, mean reversion this quarter. It doesn't do that. It changes sometimes quickly actually, but the changes aren't always obvious. So if you're plugging away with the same strategy in the wrong market conditions, you're probably going to lose money, and it's time for you to assess and say, hey, am I well out of sync with what's going on? Am I hugely out of sync with what's going on? You probably are. All right, next one, guys. You keep getting stopped out just. So getting stopped out again isn't the massive thing, and it would be just the same as that, keep getting losers. But if you keep getting stopped out just, if you're day trading, it just goes a few pips, pings you out, fires off. You're swing trading, maybe 20, 30 pips, and then goes in your direction. That is a big sign you're out of tune. That's a big sign you're not in sync and you need to realign something. Perhaps you need to reconsider stretching the stops. Perhaps you need to consider the entry a little bit later, whatever it may be. The point is, the stops should be at a sweet spot. And if you're giving away so much to a bad entry or just a poor judgment, you're giving away the advantage you've got of having a stop. Your stop always has to double, which may make the setup and strategy a completely negative expectancy strategy, which is not what you want. So watch out for that, guys. If you're constantly getting just pinged out, take heed of that. For me personally, when I see that, I'm very, very quick to adjust, because I know that it's painful, that it's not good, and I need to either look at it and assess and go, hey, you know what? I'm getting stopped out just the way it is, or I might be out of touch here. I might be a bit early with my entries. I might be not really allowing for the noise. Let me tweak my plan sooner rather than later. At least if you can assess it, you can say, I'll carry on, or you know what, let me dial it a little bit. All right, fourth, you missed limit order fills by a few pips or ticks. Very, very similar. Again, you're just out of sync. The market's moving like this and you're moving kind of 4 steps behind it. So you've got your limit in, the market's already peaked and is turning and it's not quite hitting you. You get the point. The idea is you want to be with the ebbs and flows of the market, whether that is trending up, trending down, or in a range. And if you're out of tune with it, you're always going to be missing that fill. You're always going to be getting stopped too early. You're kind of one lock step out, if that makes sense. So keep an eye out for that, because those two things in sync give you evidence that you are well out of sync with the market and you need to adjust, lock yourself back in tune with it, then start to take the profits again. Number 5, you take persistent, lengthy heat on your trades. More for swing traders generally. If you are persistently underwater, you take a trade and then you spend days, weeks with the thing underwater, unless of course the thesis is for something to pick up later on in the quarter, or however, whatever it may be. If you're taking persistent lengthy heat on your trades regularly, you need to adjust something. Your entry criteria might be too aggressive. Your entry criteria might need an extra filter in place, because really you want the trade to work immediately, or you want it to not give you too much heat. Okay, swing trading, you can accept some heat. Let's say you're buying off support, it loiters around, pushes back up. But if you're constantly underwater straight away with all your trades and you're taking heat, and a lot of them are underwater for several weeks, several months, whatever it may be, days, you need to adjust, because you can do something about that. At some point it's going to come back over your entry point or stop you out. And if those eventually come good, then you can say, okay, what actually is part of that that's making me pull the trigger too early on this? Am I too early? Am I too late? Perhaps I'm so late that I've gone really stretched and the whole thing comes back on me. There's something that can be tweaked relatively easily to reduce that and make it less length amount of time. You know, don't want much heat on the trade, and especially not for any lasting duration. Anyway, guys, those are 5 kind of things to look out for to see that you're out of tune with the market. If you spot any of these, it might be an idea to step back, protect capital first of all, move back, reassess, adjust the plan if necessary, then step back in and go on the offensive and commit some capital into taking some more risk. But until then, dial it back, check it, make sure you're not out of line, then go back in and play the game. All right, guys, take care. Keep your risk managed, whatever you do. If you like this kind of stuff, thumbs up, much appreciated. Thank you. Bye-bye.